family bank planning to list on the Nairobi Stock Exchange pretty soon. It's a listing on the bourse by introduction, and this means that you're not coming to market to raise capital as such. So why exactly are you venturing down this path?
Thank you. I think we've taken this particular approach as a step phase. Family Bank, we were founded in 1984. Like all big businesses, we began from one entrepreneur, so we've remained largely as part of the family. But we have now evolved to the extent that the bank wants to get into listing because we have an additional 7,000 shareholders, and we would want to unlock the value of our company. We would also want to create a liquidity around our share. We would want to make a statement just around the profiling of the company and the fact that the company is taking a different direction now from where the founding entrepreneur, Mr. TK Muya, has.
So let's get into that profile specifically, because that would be the incentive for the investor to be buying in here. I mean, you're a bank that caters to the needs of the mass market in Kenya. You've got a strong contender in that regard, and that in the form of Equity Bank. So what's your value proposition at this stage?
I think the value proposition for us at the moment is we are building a respected leading Pan-African institution. In fact, our eyes are beyond the borders. Specifically, if you look at Family Bank today with 1 million customers plus, we are largely now becoming an incubator where people are graduating from small and micro. We are not strong in terms of small and medium enterprises. Our treasury offerings have been weak. We've got Kenyans, ideally, who are also investors. They aspire to bank with Family Bank because they are also shareholders. And we clearly want to convert these opportunities in terms of business into the P&L. So the first step for us has been to just make sure that we have the capacity. And this is why the alignment actually has been from the top, where we have defined the market spaces. The corporate, we have put a very strong corporate offering there with a seasoned corporate banker. A team is in place. We've gone out and hired a very experienced treasury because this is actually business on the table for us. Mm-hmm. So we will largely not just focus around small and micro, which is a part of our origin and where the founding entrepreneur really focused the bank. We are taking a different trajectory because the opportunities are there. For instance, if you look at the small and micro, you've got these models with some of the most successful microfinance banks like BRI in Indonesia, where I also partially trained during my formative years. And largely for us, the way we see ourselves going is we might end up carving out an entire subsidiary to just focus on the micro credit activities, and we have recruited again a team to specifically just focus on small and micro.
Of course, so that comes with significant risk, Peter. So let's run through some of your risk mitigating strategies that are at play, especially where you're catering to a mass market that is severely under pressure. We've got, rising inflation rates really eating into consumer spend at this stage, and their ability more so to service those loans that they've taken out specifically. So run us through some of your risk mitigating strategies at play.
Yeah. The fact is you cannot plan a business long-term perpetuity without taking into account in terms of these hiccups. If you look at the current macro environment in Kenya and the inflation, these to me are purely temporary shocks. And these should not hold us back from executing our strategy again amidst a very robust risk management framework that focuses on all the risk parameters and mitigations as far as each market segment is concerned. And this is where, for instance, if you look at the current alignment and reorganization in the bank, the first hire for us was a credit director from a multinational bank somewhere in Ghana to specifically come and strengthen the risk management framework around the credit portfolio on all the market segments. And largely for us, what we are saying is you can choose, for instance, not to exploit the opportunities as they are sitting. We do appreciate the difficulties and the hardships, for instance, out of the impact of high inflation on the lower end of the market. But the fact is, This market has been growing and we still have very good business really to do. So the focus actually is right across, and we see if we diversify ourselves then right across. From a performance perspective, from a risk mitigation perspective, the bank will certainly return very strong performance.
Of course, you are operating within a very changed and altered environment where the competitive pressures are certainly intense. Has defending market share been a challenge for you, especially with a player like Equity Bank that's certainly not turned its nose up against the unbanked market? Has that posed a challenge?
I tell you, this is a 40 million plus population. The fact is we still have a huge population which is not banked. I don't fear challenge. I'm an accomplished banker. My background, my career is in banking. I've got a track record. I'm quite clear in terms of strategy, the product offering. I've got 58 branches sitting right across where the population is. At one time, we were actually bigger than the competition you are referring to. That's way back in 2004, not a long time ago. But I think over time, the strategy, the push, the focus was clearly not with us. And what I've done within my first 7 weeks is to create a lot of focus, to define the product offering at branch level, which is sitting where this huge population is, to unlock and redefine and put a new structure just around the growth path. The technology side again is being addressed for purposes of making sure that the channel expansion and the product offering is not going to be driven just through the traditional branch channel. So it's a combination of strategies that have been put in place. But the fact is we will compete, yes.
Yeah.
But there is still a huge business for us to offer. And I mean, and what we are out to do at the moment is to just make sure that we are quite distinct. We display certain capabilities, and the business will grow.
It's certainly growth that we'll be keeping an eye on. Thanks so much, Peter, for joining us this afternoon. Peter Munyiri is a CEO of Family Bank in Kenya.